All right, everybody. Good morning. Good morning. Happy Monday. Let's get started. It is 9 o'clock on March 2nd. New month. We will see what seasonality looks like. So, guess we're going to war with Iran. Futures down 1.21%. We've got the S&P creeping back into some breakout territory. We need to watch this very carefully. So this is now, 10, 11 weeks of a decision. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14 weeks of indecision. Okay. In the near term, if we break, let me share my screen before I forget. All right, chat is open for everybody. What's happening? Morning, Richard. Madness is a good description. Yeah. I mean, at least they waited for the weekend, huh? All right. Morning, Jeff. Good morning, Donna. Eric, what's happening? Michael here, Tom here, Ernesto, good morning. Yep, plus or minus 60.9. We'll take a look at that, David. Thank you. Let me get logged into my broker platform. What's happening, Larry? What's up, Chuck? Brian's here. Alan in the house. Lisa here. Aurora here. Dave, good morning, Dave. Bonjour. All right. Okay. Let's see what the reading is. I'm seeing 60.9 in the chat. Is that tasty? Is that think or swim? I'd like to see the higher of the two. But like I was saying and showing on the chart here is SPX. I'm seeing a 60.9 on Tasty. All right. 60.9 on Tasty. We're looking at a pretty healthy gap to the downside today. This is the CFD, so this is real-time S&P. We're not breaking all of the lows, but given that it is a new month, if we have some pain in March, that's likely where we'd be falling. We go to the daily time frame. There's a 200-day moving average sitting right here as well, around that 65.50 handle. So if we have a daily close, and this is what I'm saying, the body of the candle is below these lows. That's probably the path of least resistance. Okay. So in the near term, I mean, look, we could be opening today around these same lows, and we could spend, today, tomorrow bouncing right back up into the same range that has been chop fest for now 14 weeks. All right. But if it's, opening lower and pressing lower and we break lower, whatever correction this market has in store is probably getting underway if we're starting to break below 6,800, 6,775. Okay. Thinkorswim 60.7. Got it. 20. Yeah, VIX is over 20. I mean, we've had a lot of VIX over 20. I'm going to sell some premium today. Here's my plan. Let me get a text box here. My plan is daily profit play. I'm probably going low delta. Low delta. I'll probably go 5 wide. Well, I'll go 5 or 10 wide. We'll see. Okay. Play defense as well, if possible. Waterfall income. We have a live session at 11:30. I'm going to introduce a 30 to 60 day stack strategy today in class. I think that if we're going to see a correction in March or April, I'm looking at those expirations. And then in engineered options. So, I mean, realistically, I'm still going to participate. So I'll do XSP participation. And I know full well that, I mean, if I get in this week, things are not looking very bullish at this time, right? But We don't know. If the market, opens lower and spends all week fighting back, we have a chance. I'm still going to participate and keep the risk small. And then I'm also going to do new weekly and new monthly setups. I think what I'm going to do is in engineered options, I'm going to go new monthly for March. And I'm going to set some out for April as well. I'm just going to get some percentages lined up in addition to our defense levels. Okay. So I'll get these all highlighted in Telegram, waterfall income live session, daily profit play today. Let's see what we look at with the 60.9 plus or minus on the day. Okay. I will say I was thinking about this yesterday. Pinch point, probably one of the best single stock vol strategies. We trade both directions. Just give us movement. That's all we need, right? So I'll take a look at the pinch point scanner this week. We'll see if we can find some good go zones. And again, more than likely, I mean, we do have a nice pinch and coil here in the S&P and the Dow and the Russell. I mean, that tells us that more than likely these markets can't just stay like this forever, and most likely directions coming soon. So I'll take a look at that as well as some individual stocks. I would say this: expect some volatility. We don't have to, we don't have to be heroes and pick things perfectly. We don't have to focus on like, well, I've got to buy or I've got to sell. Do both, right? One of my favorite strategies trading pinch point is I go both ways. And as long as price hits an expected move, and with this type of volatility that's anticipated, a higher VIX, it not only hits these expected moves, it also exceeds them because volatility continues to go up, right? So this is all pretty good if you ask me. Good ways to make some money, good ways to participate in the market, not getting overcommitted. If we're also long in crash insurance, I'm long VIX. I mean, if we have a flare up into the 30s, if the VIX goes to 30 this week for whatever reason, I don't know. We've got long VIX. We've got synthetic longs. I could also look at selling some options today, which I probably will. I'll sell some premium. We'll go Project Options Edge. Most likely selling premium with the high VIX. And selling premium is out of the way. I'm putting a lot of these positions out into September of this year, December of this year, and I'm going below the April 2025 lows. A lot of them are ratio spreads, some naked puts, some creative trades, 1-1-1s, defined risk, whatever. Give me a couple $100. Let me get some safe income. Okay. Eric, sure. I mean, I can do whatever I want to do in engineering options, but what I would say this is no, I don't want to take the profits. If you want to take the profits, take the profits, man. It doesn't do me any good to have something running where it's like, why do I like 100% return on risk? Because it's nice to make that money. If I get 100% return on risk, the hole is never big if I lose, right? Even through all this 14 weeks of indecision, we've had, losses and winners that make us money. We've had 2 losses and 1 winner. We still make money. So, I mean, you're asking me like, would you just change your entire strategy? Sure. It's not that strategy then. It's not engineered options. I mean, you can always take partial profits. That's the easiest way to get paid is just take partial profits. But all of a sudden you start taking partial profits where your average winner is $50, your average loser is 100. I mean, now you have to have a 70, 75, 80% win rate. So I'd rather survive a strategy that can have a 54, 55% win rate, which is already a house edge. And then the markets generate on average like a 58 to 60% win rate. And we have defense to go on top of that to stack in for profits. And every loss is made up for with 1 win. That's a lot easier for me. Okay. Type of day where the reverse, I mean, maybe, unless it was kind of like Friday. What day was it last week where the market, I mean, Friday was kind of like that, wasn't it? Market was down for the morning and then just spent the entire day doing nothing. So I mean, I mean, with the VIX at 60, you're probably gonna have to go pretty wide on that dead zone for that reverse R encounter there, Buck. You probably have to go like I don't know, you probably have to go 40 points, 40 to 45 points wide in order to get that like $6 credit. So probably won't do that today. Yeah, 20 wide point. I mean, I don't think 20 is going to give you much. You might get like 550 for that. So you make like 50 cents to risk 450. Just you can price it out, man. I think that with the VIX at 23 and the expected move at 61, you're probably gonna have to go to like a 35 or 40 wide dead zone. Okay. Yep. Oil's way up overnight. I know all this stuff is happening. So, we can't say the market's not interesting because it always is. And today is no exception. So just putting together a little bit of plan. We got opening bell here in about 17 minutes. Um, looking at a trade on daily profit play as usual, waterfall income. I'm looking at either March or April, my stack strategy that we talked about last week. Engineered options. I'm still willing to participate. New weekly. We have an expiration today. We'll see what happens. We might get filled on a defense trade today. If we do, that actually could help us. Again, we could lose participation break even, and we could win defense and still walk away positive. Or I accept the risk, and this is why I've been trading small in engineered options. But I also want to get some new setups for the month of March. We did take profit for the February monthly expirations, which was great. Net, we made money in February. I mean, February was down. Individual stocks, the dispersion trade, 130, the S&P was down anywhere between 10 to 20%, and we still made money. So, that to me is a very, I don't know, a very battle tested strategy. I mean, it's certainly a lot easier when the market just goes up every week and up every month, but that's not the reality we have right now. So I can't, beg the market to do something it's clearly not doing. So let's have ways to still make money regardless of what it does. Plan to schedule are you talking pinch point? I mean, I'm just saying I'm going to take these trades. So look for them in Telegram, look for them updates, look for them with alerts coming out in your classrooms. So look, it's going to be a busy day. Like I'm going to be looking at trade mill face off today because we have a VIX that is in, pretty solid territory. Now, this could certainly rally again. I mean, VIX crossing 23s. We had recent highs back in November last year. The VIX was up to 29. So if we have the VIX just continuing to climb, just be careful. VIX can go from 20s to 30s very quickly, 20s to 40s very quickly. So I don't want to overcommit and get heavy when the VIX could still go up. It's going to be tough to call that bottom. And if we break for the first time in 14 weeks, if we break these lows, this green line, by the way, so this box right here, if we break out, that is my measure move to that green box around 65.50. Same thing is true if we break to the upside, but clearly the pressure is on where it looks like it's going to be breaking to the downside first. That's kind of my big, support level 1, and this would be my support level 2, around 62 to 6100. Could we have a support level 3? Sure. And this is an if, but I mean, if we were to fall enough to drop to like a 15-20% correction, that to me is it's a dip. It's a buy the dip. Now I don't know if we rebound to all-time highs again, but I'm still going to be trying to place trades in here to buy the dip, and I think this is one way to generate some decent returns for 2026, and that's just getting the market to bounce back. So if we hit here and bounce back, if we hit here, bounce back, if we hit here and bounce back, it might take some time. Okay, but we have been spoiled for I don't know a decade now of V bottoms, V bottoms, V bottoms. So we'll see. But I'm still going to take some positions and make sure I've got some option strategies set up, crafted options. Okay. Engineered options. Yep. I'm keeping defense trades in. I'll keep them in. If we get filled, I mean, that 60, 682, 681, if we get filled on that, we might get filled for over 50 cents, which isn't a bad thing. Obviously, price would need to rally, pretty hard because we're going to be opening up around 680 today. So if we're at 6,800 S&P, we're probably opening around 680 for the XSP. Right? Let me see on engineered options where my trades are at. We had so the 693, 692 was filled, 690, 689, that was participation and break even. And then the 682, 681, that is looking to open and expire today. We also have a 675 to 674. If that fills today and we hold, I mean, we could, again, defense for a reason. That's down to a 100% ATR. Okay. So I'm going to let them marinate. If we get filled, we get filled. If the market is going to gap lower and rally, gap lower and fall, I accept whatever happens. Right? Because if I don't have a defense trade, most likely I'm certainly going to lose the participation break-even trades from last week. So defense is a nice way to at least hang in there for the day. Okay, so I'm not canceling anything on engineering options. I'm putting the trades in last week. They're still in. They're still good. Okay, if we get filled on defense today, great. It gives us a chance. So if we get filled at the 682, 681, and we stay above that today, then we would lose participation, lose break even, win a defense trade, and still make money. I'm okay with that. So I'm going to give it a chance. Okay. Oh my gosh, I didn't know. Blake, you're back. What's up, man? Blake is back, everybody. Proud new father. Probably riding on fumes right now. Big congrats to Blake and his fam. Adorable little daughter. All right. Good stuff. Good stuff. Okay. So, all right, we got opening bell in 10 minutes. Broker platform is up. If we get breaks, just again, this is not a time to play hero. We got a 23 VIX. If we're breaking out here, the market might be putting in some corrections. It's like this is fine. If the market is clearly just in addition to the bit of the deleveraging, a bit of the dispersion trade, the dispersion trade. Is this all it needs? Is the market just needs to get this out of the system? I mean, I think it's the market's climbed the wall of worry on a lot of things, rolling down here with basically a brand new war, AI concerns, major disruptions, PMIs are higher, PMIs are up, PPI is up, right? I mean, I don't know. It just doesn't take much to kind of domino into like, oh boy, this is not looking good. But this is a calculated move. This is a decent level of support because it's past resistance becoming future support. And that puts us around, I believe this level is around 10%. Okay, so from our recent all-time highs to this level here is around a 12% correction. Healthy, right? Here's a 7% correction. Healthy. 7 to 12 seems reasonable. If it overshoots, we could have 15, right? If it overshoots, we could have 15, we could have 20. That's not going to feel fun, but I think the market's ability to respond to maybe it's a little bit overdone. A 15 to 20% rally point to get back to break even would be something I want to be looking to invest in. Okay. So this is why for the last probably 4 or 5 months, especially, I've just had some extra cash and dry powder sitting on the sidelines because I look at it as an opportunity. Most people don't see it this way, but smart investors do. You should look at this area. I'll box this little guy in here or this area here. These are investable opportunities. If you want to generate alpha for the year, it's trying to get a decent dip. Okay. Am I assuming the market goes all the way back to all-time highs from here? I don't know. I'd love it, right? If we're long here and the market's, breaking all-time highs, great. But if the market just gets back to all-time highs, or even if the market rallies, it's better than nothing. So there's a lot of ways to take a crack at it. But Hopefully, we will see. I will say this: if we're breaking down, then I am focused primarily on just like selling, selling calls. I think you can do bear put spreads, you can do bear call spreads, but the market's probably going to have a little bit of a cleanse to the downside. Could be the tune of 7 to 10%, could be 7 to 15%. I don't know. We've got some key levels. There's a 7% correction. There's a 12% correction. Down in this area, 15 to 20. If it gets a little nuts and a little overshooting, we'll see. If it overshoots to like 20%, well, we saw 20% last year, didn't we? We saw 20% plus in 2022. We saw 10% in 2024. Like 10% is not unusual. Okay. All right. Private credit cocker. Yeah. So more stuff like Blue Owl, the private credit crunch. Now, to be fair, the bond market is kind of showing that right now there's some cracks in the private equity space. The circular financing going on, the AI concerns, bonds are asking for this to stay bid. I'm going to take a screenshot of this just to make a reference point for this week. Okay, if we go, let's go ZB for bond futures. So bond futures down this morning. If we go TLT, you might be looking at a gap lower. I mean, about a dollar lower. But bonds have caught a little bit of a bid here. Gold and silver certainly catching a bid and still going up. Look at that gap. Look at that gap. Ooh, baby. So gold gapping up. Okay. Again, the week is not done, but I'm very curious how this gap plays out this week. So could it be, to me, this was a measured move. There's my Gartley symmetry. So high to low, and then you have a measured move. I could see this. I could actually see gold selling back off, which is probably what most people aren't going to be doing is chasing gold. Like people chase gold to the upside. I don't know. I'm not ready to load in on gold yet. I think that's the bait. People want to chase gold. I feel like that's an easy trade to make them lose. Is it just gaps higher and they're starting to chase that gap and it just fills and falls? So here's silver. I mean, here's silver down. So I don't think this is the time to chase. Bitcoin too. I mean, 60K. We'll see. Don't be a hero trying to call the bottom of some of these. Bitcoin, especially gold and silver, I wouldn't be chasing to the tops. We still have a technical reason for this thing to fall back into about 4,200. Not chasing highs. Okay. What I do plan to sell today, premium wise, probably some Dow. I'll sell some Dow premium. I might sell some small cap premium. Indexes wise, they're pretty cheap. This would be like a 370 to 360 area on Dow. I wouldn't mind selling that. Some blue chip, some defensive, certainly a little bit less beta, price weighted, not market cap weighted. So if I can get a decent premium on Dow, I'll probably sell some of that. And then Russell's on a bit of a flush. I mean, where's support on Russell? Probably back down to the 144 200-day moving average, somewhere in here. If I'm selling premium, I'm using the April lows. It's cheap enough. I consider some ownership there. If we came back to like 160, right? Here's a 172. That's Liberation Day lows. Here's 162. Nice little ratio spread could work out really nicely there. Okay. So yeah, buckle up. We're gonna have some volatility. VIX. So opened up around 25. This is this morning. So I think we have to acknowledge that that's the VIX that we need to possibly be mindful of. Okay, so that's a 25.25 VIX. We could move right back up there, but that's a 1.58% move. Market's already down like 1+%. We got futures down 1.2. Okay. So look at our gamma today. It's all over the place. But could we break and fall? Yep. I mean, we're going to be gapping lower by 1+%. So take your close. We're going to be gapping somewhere around here this morning, probably about we're probably sub 6,800 when we open this morning. So let's say we open up around 67.93. Well, if we open up here and then we have a plus or minus 61, that puts us back into this territory, or that pushes us lower. Obviously, if we're going lower, the VIX is probably going to go up. Okay. And we're calculating out like a 1.57% potential move. Now we have to consider that not just from the gap, but also from intraday price action. Okay. So we'd have to go like another 1+% to the downside, which probably makes that 67 a reality. So again, like this is not a day to be like super heroic. I know the VIX is up, but if the VIX goes from 23 to 28 today, 23 to 30 today, it is going to be increasingly difficult to call that bottom. So I think a lower delta, maybe a 5 or 10 wide, like today is the day to kind of manage some risk and let the markets just kind of settle in for the day. We'll see what happens. It's always nice to have the expected move be greater than the actual. That's how we make money in daily profit play. Okay. So we'll go from there. Yep. And defense could be, I mean, based on our deltas and stuff, defense could be really important today. So I think if we went lower delta on the daily profit play and stuck our defense trades around those areas, we could get, I don't know, we could get pretty lucky. I would say just at a glance, let me see what this sell off would be. So if we open up around 67.93, yeah, I mean, unless the VIX rips to like 26, 27, 28 today, I think 67 should be pretty safe. So if I'm selling premium, I'd like to sell, maybe my put spread around 67. Obviously, stack a few defense trades around that level as well. And it's just a day. It's like I think that would be a wise plan. And then same thing to the upside. It's like, do we spend the day fighting back? Do we fill the gap? It's like that's a big move. That'd be a 100-point move to the upside to fill the gap. The VIX would be smashed, probably back down below. I mean, we probably hit 20 or something today if the VIX is going to drop. But something doesn't sit well with me thinking like, oh, the market's going to rip today. Like it probably won't. It'll probably be like a risk off feel. But it's a good day to sell some premium. That is for sure. So all right, we're keep an eye on everything today. Let's get cracking. Jump into the trenches and see where things are at. Okay. So gapping lower should be down in here. Yep, I see it right down here, right around 6,800. Right around 68. Okay. So coming on over. SPX. March 2nd. I'm seeing the we said plus minus 61. We're showing 55 right now, real time. To be on the safe side. All right, I've got defense filled. Actually, no, we're getting some waterfall income filled. Waterfall income filled. Nice. That is a 50, 30, 25, 30. Okay. That's a waterfall trade getting filled. That was one of the stack trades I talked about last week. Okay, let's see here. So on the put side, I'm gonna go 10 wide, 10 delta. These deltas on the call side are so frustrating. Look at how close that is the expected move. Gap fill is around 68.80. Gamma at 69. I mean, I kind of want to be above 69 if I can be above 69. That's a 4 delta. Gosh, I hate that I'm going like so freaking high on the call side. All right. Give me $1. Give me $1. I'm going 6,900, 6,910, 66.90, 66.80, trying to get filled for $1. It's trading around 95 right now. Come on. All right, I'm accepting 95 cents. I'm risking 905 to make 95. New trade coming in. New trade. Today is the 2nd. Okay, trades in and filled. I'm going to put this trade in again for, I'm going to try $1.50. I'll take the same strikes. I'm going $1.50. Actually, you know what? We might as well, if markets get nuts today, might as well put it in for like $2. That'd be a great fill. If we get filled for $2, I'll take that trade. So I'm going to, I'll add this into the Telegram for Daily Profit Play. I'm going to repeat this trade for another contract, asking for $2 credit, pending good till canceled. That way, if we have some wild volatility, that would put my trade up to get filled for 95, get filled for $2. I'm in for about $1.47 net on 2 contracts with pretty good deltas. Okay. If it doesn't get filled, no harm, no foul, right? I mean, I'll just keep the 95 cents. But let's see if we can get this one filled for, 95 cents. Let the day do its thing. $2, that's a pretty good fill at pretty low deltas. And now I can throw in some defense. 80, let's go 85, 69.05, and 20. Defense trade in for $1 credit. And down here, I'm going to go defense. $75 by $60. Okay. So defense trade sprinkled in. That was a buy, sell, buy. And then I will do another one. Let's go 65, 55, and 40. Another defense trade for $1. I'm putting 2 defense trades in on the put side. So $1 credit review. Again, those defense trades may not fill. Look at our expected move, however. We're up to about 68.30 right now. The day is not done. Okay, we'll see. This whole idea of just like gaps and war and uncertain. It's like it's a guess. It's an educated guess. We're using our mechanics. We're using our deltas. We're letting the market makers be smart. They typically are great at their job as far as like making the markets efficient. Even with stuff like this, I mean, the VIX is higher. It almost makes them work harder. So hopefully we're in pretty good shape for the day overall. My strikes, I did the 69 by 69.10. So the expected move, let me calculate out. We were looking at a VIX this morning. I mean, the VIX is getting smashed lower here, but we had the VIX. I mean, I could argue that the VIX is probably safer on like 23.7 right now. 23.7. Then another VIX up here at 25. So it looks like the market's experiencing some aggressive vol suppression for now. And we still haven't, I mean, this is the lows around 67.75. We didn't test those yet. So I'm curious what this looks like. Set a chart alarm here at 67.75. Okay. So I'll start from scratch. I know that this is a 6900s where I put my call strike. and 66.90. Okay. So green line is my daily profit play. So if price can stay lower than this and higher than this, we're in good shape. If the market just kind of stays here in between gaps and the opening gap low, so this close from last week and the opening bell gap, if we stay here for the entire day, we got a pretty safe 95 cents to make today. And maybe no defense would trade. David got filled $1.25. Nice. David 69.05, 66.85, 5 wide, 55 cents. Okay. Yeah, I'll post them in a second. I mean, the defense trades are just going to sit in pen for a sec. Yep, I'll put them in Telegram for daily profit. Just give me a sec. Okay, yep, I'll get those defense trades posted. Um, Based on the gap lower, I mean, the crazy part is because this is such an aggressive gap, I typically take the close here and then measure up the VIX move. So let me recenter my daily profit indicator. We closed, I think we closed around like 77 or 78 last week, right? 60, or I'm sorry, 68. Yeah, 68.78. So 68.78 was our close last week. That'll recenter my VIX box. There we go. So I mean, the VIX box low is down to about 67.80. We are quite a bit lower than that. So open. I mean that's a 25 to 26 VIX. If we're wrong on the put side, that's a 25 26 VIX. I'm not saying that it can't happen, but from last week down to here, it'd be about a 2.7% move. I mean, we've seen it. We've seen 3% sell-offs in a day. We've seen 2% sell-offs in a day, but hopefully we are, pretty safe. So I'm just going to stack up a couple more defense trades here. So if I go 15 by 25 by 40, another defense trade. I'm going to put in those 10 wide broken wing butterflies. So they're worth $1,000 so we get a profit trap. I'm just kind of stacking up like low delta trades. All right, defense trades coming in. Defense trades. These are broken wing butterfly setups. Risk $4. Credit 1 up front, and the $10 profit trap potential. Okay, so working order, call side, put side, put side. All right, let's go call side first. So that's one pending, the other call. None of these strikes overlap, by the way. They're all separate strikes, which is good. That makes it pretty easy to monitor them and manage them. And then 66.85, 66.75. Okay. So I'm putting in 4 defense trades. They're all broken wing butterflies. They're all credit spread. They're all credits. So it's not costing me anything to take them. They're not filled yet. Just let price do its thing. So you can see on my broker platform here, right now, the calculated move is 45. That is in the shaded red zone. My puts are down here, out of the way. My calls are up here, out of the way. If the defense trades never fill, no big deal. If we just take today's trade and go very low delta, we did a 10 delta put, 4 delta, 5 delta calls. If we grab 95 cents, it's better than nothing. Okay. It's in Telegram for Daily Profit Play members. Yep. They're posted. 9:42 a.m. posted. Okay. I don't think my XSP defense got filled yet. So got the 90, 392, 90, and 89. How do I not have what? Did anybody get filled on the defense trade? What the hell? I'm looking at engineered options right now. You did? Okay, good. Yeah, that's great. Like, why isn't my trade filled? All right, let me look at it. 3-2, 682 by 681. $682, 681. Apparently, I didn't have it in. That's on me. I'm putting it in though. There's my 682, 681, and then a 675 by 74 for 50 cents. Okay, nice. So 682, 61 filled at 50 cents. Excellent. Good. So if we stay above that, then we could lose participation, lose break even, win defense, and still win the week. Again, that's not bad. This is what makes trading a bear market very difficult, by the way. Right? I mean, market's making lower highs and lower lows. We're gapping lower, but it spends the day fighting back. So it's like almost like the pressing lower, the push to the downside is going to come with like aftermarket trading, right? This is why with stuff like daily profit play, it's like you just approach the day, let market makers do their job. It's obviously very liquid, and I wouldn't be surprised if this is where we get paid a lot, which is the expected is greater than the actual. So today our plus minus at 60.9. We'll see if the market is actually going to move that. Now, I like to look at this level going up 61 and then the open here going down 61. That's where I'm going to kind of call my levels today. So I put the green lines in because that's my daily profit play. I put the blue lines in for what the market makers should do to kind of maintain efficiency, right? And on the call side, I had a low delta. I'd like a 4 delta, so it shouldn't be an issue. But probably the safe trade here. Let's go 61 points. 60 point. I'll just go 61. So about 69.39. And then the gap where we opened, plus or minus 60, 61, 67.38. So this in blue would be my kind of safe way to use the expected move. So if the markets are efficient, we'd stay below this blue line. We'd stay above this blue line. You can see that my call side, even though this is like a 4 delta, I mean, it's way up there, which would be like, I mean, that's like trading a 1 delta for crying out loud. That's so hard to trade and get anything for it. And then we did a 10 delta put, which is way down here. So I still think for the day it's safe. I mean, our 95 cents is still looking pretty safe, but that's how I got it mapped out today. Doesn't take, I mean, Thinkorswim, Web. I'll show you the defense trade. You have to put it in for a credit. So I'll build them out just like I throw them in. Okay, engineered options, trade management update, XSP 3-2 expiration, sell the 681. Was it a 682 by 681? Yep, 682. Buy the 681. 50 cents. Shoot, hang on. Participation trade, break even trade, and 50% ATR defense. Okay. Um, so you're talking the call side there, right? So if I do SPX, go to the option chain, March 2nd, add my strikes up here. I'll pull the defense trade for my Telegram. 68.95. So I buy that call. 69.05. I sell that call. And then 20 I buy. Structure wise, it's a 1-2-1. So I'm buying one, selling two, buying one. I have to set this trade up for a dollar. Good till canceled. Now that shows a debit, so you have to put this in as a negative. At least that's my Thinkorswim. So if I'm going to go buy the 68.95, sell the 69.05, buy the 20. This has to be 20. Buy the 20. 1, 2, 1. Set this up for minus a dollar. Now that should enter as a credit. So if I get filled for a dollar with fees and everything, it's going to be 95 bucks credit. In addition to a $10 wide profit trap, this trade is good till canceled. So it does take it. You just have to tweak the the pending order. Okay. Steve, I think you're talking about engineered options, right? 682, 681 would be engineered options, not WI. Waterfall income would be a yep, okay. All right. So we're just kind of hanging out here. Prices seem to be pretty contained for right now. Here's live gamma. I'll bring some levels in. So today, 0 DTE, 6,800. We're trading at 6,842 right now. We opened up right around that 6,800 handle. So in real time, here is my real time gamma. So we open up. Look at this wick. If I can zoom in, can you ever see how long that wick is to the downside on a 5 minute chart? This is where we opened. That's a long wick. This is one big fat candle. 15 minute opened up. Seems to be a bit of a discrepancy between what I have in this live feed from Quote Stream versus TradingView. But positive negative gamma is around the 68.90 handle. So our call side's at 6,900. Put side all the way down to 66.90. I mean, I think at a glance that's pretty safe. Pretty safe. Yep. So we will just hang out. I'll get some new trades in for engineered options. I'd like to get a couple sell trades in, see what the VIX is doing right now. The VIX is squashed back to about 22. I mean, I could fingers crossed that the VIX goes back up to like 25 to sell some premium. I think it's good enough to maybe take a stab at some Dow. If I go like a 111 in the Dow, trading at 486, stack up some premium, maybe in like the 350 zone. Dow, go September. So 350. Ugh, that's pretty bogus there. 360, 350. Yeah, take that back. That's not terrible. 10 wide profit trap, 15 wide profit trap. I mean, the bid ask is pretty wide. I don't know if I'm going to get filled here. I'll try this trade for a 15 wide. How wide could I go here? So if I do this is a ratio spread, $1,500 profit trap versus 4.61 delta, 4.06 delta. If we do a 111 buy, sell. So I get a $15 profit trap, naked put at 325, still make it $1.85. I mean, if that fills, that's pretty good. That would be assignment at 325, which is pretty low. Comparable credit. Let's see if this gets filled. This isn't too bad. All right, let's see if this will fill for $1.90 credit. So 111, naked puts at 325. Should not be assigned. Probably has like a 99.5% chance of profit. But yeah, I'll have to massage the credits a little bit. $1.85. I want at least like $1.75 in this trade if I'm taking it. $1.85 not filling. $1.80. $1.75. Come on. All right, $1.70 final offer. Then I'll restructure the trade if it doesn't fill. Not filling at $1.70. You dog. Okay. So I have the 375, 350 already filled. 370, 350. Okay. We'll give it a whirl. All right, it's got filled for a 370, 350. 370, 350 for $1.75. Let me get this in for my margin accounts. Go $1.75. Project Options Ed's getting another trade here this morning. Margin accounts. Get fill at 206. What? Jeez, that's a great fill. That's way better. Yeah, I'm getting this up to 205 now. Okay, pretty good stuff. So get filled on that one for anywhere between $1.75 to 205 coming into Telegram for engineered options. Or I'm sorry, Project Options Edge. Project Options Edge. New trade. Going 9:30 expiration. Buy the 370. Sell the 350. $1.75 to 205 credit. I'm filled 175 and 205 on multiple counts. So we have a 99.5% probability profit on the trade. We have an assignment that is like maybe a 5% chance of assignment. Just based on the current delta. So I mean my naked puts the 350, that's a 6 delta. So that's like a 4 to 5% chance of assignment. My break-even price, if assigned. So I'll take the 350 minus 20 minus $1.75, 328.25. I would own some Dow at 328.25 and repair that thing. Okay. That's new on Dow. Take a look at the Russell. Russell 160 strikes. Try to be a little bit less premium, but let's find out. If I go September 30th, see what the strikes look like. Not terrible. If I buy the 175, sell the 165. Not great. I mean, that's the strike that I want to use. I can go to December. I don't really want to go to December, but I have more strike selections here. Let's try the September 18th. Uh, 175, 165. What's that previous low? This is a 160 low. Let's see what that ratio spread looks like. So if I do a 170, 160, ugh. Well, thought I'd get a little bit more premium for that. I don't love that there's no expirations. I'd like to go to like an October expiration, but you have to go from September to December. I think that's a little little wide. If I go out to the end of the year, I mean, I get more premium. Let's go to the 18th expiration, 170. Let's go 175, 150. Yuck, man. So I get $100 and I got to wait an extra 3 months. I'm just gonna hold off and see if they'll, I don't know, maybe get filled in into like the October. No, I just don't want to take crappy credit for September. I'm waiting for the option chain to fill in those October expirations. We just don't have them yet. I guess I could look at Russell futures, but I can't own anything there. All right, I'll pass on the Russell for right now. All right, time to get some engineered option trades out this morning. Let's see here. So 682. It's going 3-9 expiration. BA. That is 667. Okay. Putting in 3 new trades for engineered options. They're in Telegram right now. Just since the market jumped aggressively, here is my, let's go live feed. Here's a live feed for XSP. Okay, I'm not going to chase this off the low this morning. So the low is around 682. We're trading at 685. I'm not going to chase it right now. If we want a participation trade, you can throw it in. I'm just going to put a break even. So if I'm doing participation, I have to put the trade in right now. And most likely price is going to have to fall to get you filled. So I'm going to put in a break even level first and then go down into my defense trades. Make sense? So just because we open and went up 3 points pretty aggressively this morning, I'm not going to chase that to the upside. All right, so 3 pending orders. So XSP, new trades for the 9th. That's next Monday. Going 80, put in Telegram here. Yeah, Greg, that's good. That's what we want. We want that one filled. That defense trade could help us win last week's trades. If we win the defense, right? You win the defense and you lose the participation and the break even, you still make money. It's not bad. Okay, so 682, 681. 50 cents credit. $74, $73, 50 cents credit. And that was it. Sorry, that bottom one needs to be a 68, 67. There. So it's a 682, 681, 674, 673, and a 668, 667. So I'm going 1, 2, 4. Okay, so these would be the new weekly trades. Let's go get monthlies set up as well. Okay, so monthlies, what's our final day of trading for March? 31st is a Tuesday. See if that expiration is offered up. Yep. So we can go end of the month, end of the quarter on Tuesday, the 31st. $682, $681, 50 cents. Go 667. Uh, 667. Two contracts. $652. 4. All right. Coming in hot. 331 expiration. As the 667. Sell the 652. Okay. So got 3 weekly trades in, 3 monthly trades in. I'll post it in Engineered Options Telegram. Yeah, because what I'll probably do, David, is I'll probably throw in a couple in for SPX as well. So I'm just going to go SPX, which is obviously bigger. I think I'm just going to go SPX monthlies. See if the monthlies will get that defense in. Monthlies. Yeah, I'm gonna go SPX. So that would be around the 6670, 6665. And I have a 6516. So I'm going to go 20, 6520, 6520, 6515. Okay. Trades are in. I'm not in participation because I missed the quick run for like 3, 4 points to the upside. Remember, my participation trades, I'm only going to give the market about a 2 to 3 tenths of a percent move. I never will. I'm never going to chase the market like it's up 0.5. I mean, look at where we opened. If it's up like 0.5% from the open, this opened up. Market's already up 0.94%. I'm not chasing that crap with participation to trade 1% higher than the market opened. So I will put it back down about like a 0.2, 0.3%, and I'll go to break even. So, I mean, trades are in. Don't chase. If you give the market a 1% head start, you're going to find yourself getting the markets performing less than 1% every single week. So if the market started here and it pulls back, well, obviously it can bounce off that low and be safe, but I'm not going to chase this thing 1% higher. Okay. All right. So in the monthly trades for engineered options, I have XSP, 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 and I have 2 trades in for the defense on SPX. A little bit bigger there, 1 contract, 2 contracts. I'm probably going to put in some butterflies as well. So let's go. So SPX for the monthly, that's the 31st and 6670 there for 250 credit. And the 6520, 15 for 250 credit, 2 contracts. $65. Yep. 20 by 15 for 250. Okay. And 70. All right. There we go. Okay, expect to move for the month. Low 66s. It's a 65.20. All right, so 20 there. All right, so make sure Telegram looks good. Uh, XSP new weekly trades, XSP new monthly trades, and SPX new monthly trades. It's always like this. The first part of the week and the first part of the month, it's a busy splattering of trades for engineered options. So if anybody has any issues, just check Telegram. Okay, I'm using the indicator on that CLJ. If you're looking at the chart here, this is my monthly setup. So I'm putting in my levels here for the monthly. What I'm focused in on for my monthly is the break even and the 50% and the 100% ATR. If the market goes all up for March, okay. But I'm going to put in a break even, defense. Okay, same thing on XSP. Here's my monthly levels. So break even. I'm not chasing the participation trade right now, not yet, not for the week. But my month is break even, 50, 100. So if I change the indicator back to a weekly setup, now these will shrink up a little bit. Same thing. There's my break even. There's my 50. There's my 100. These are defense levels. If the market rips up today, okay, fine. That means we win the 682, 681 defense. We get a 100% ROI with a trade size that makes us enough money to cover the losses. Our other trade, I think 690, is it 691, 690? So defense trades, those are done. It's either 691 or 690 for this week. Uh, 690 by 689. If there's a way it gets up to 690 today, I mean that's a lot to ask for, but if it does, we'd have two winners. So if XSP is greater than 690 today, so we have a participation trade would be a loss. We'd have the break even would be a win, and then the defense would be a win. So that'd be $200 here, $100 here, and a loss of 50. It's not a bad net result for the week. Put the trades in last week, make $300. That's not bad. If I end up winning the defense trade but losing the other two, I still make $50. I'm okay with that too. It's like it's a grind right now. This market is a grind. All good to cancel, yeah. Yep, 10-year back to 10%. I know. I saw the 10-year. I mean, it's back up above 4. It's like we got excited there for a second, but I am not holding my breath in this 10-year yield. Okay, bonds are down today. Gold and silver down. We're coming back to retest. Look, I've got Liberation Day charts, right? Here's our Liberation Day. This is the lows of Liberation Day where the market was cracking. Here is what I'm watching. I mean, I closed on a new house at 6.6%. I know right now the average 30-year mortgage is like 5.94, 5.95. To me, it's worth it. If I can see like a 1% improvement in my mortgage, then I'd refi to 5.6 or lower and still keep paying the same amount that I'm paying now. That would just allow me to probably pay an extra $400 to $500 in principal, which would shorten my mortgage by probably 7 to 10 years. But it's not there yet. So, and again, like this stuff is sticky. I mean, I think we have to have more pain in the markets for this to keep dropping. In my opinion, I think it's going to be hard for the rates to really come down substantially. And unless the government's going to throw some type of crazy like, hey, we get it, we're trying to lower our rates. It's either house prices have to come down or rates have to come down. I think what we are seeing is that it's much harder for rates to come down than house prices to come down. Everyone thinks their house is worth 2 to 3 times what they paid for it. It's not. That's not real estate. That's dollar debasement. If you priced your home relative to ounces in gold or silver, it's worth less. Or I should say, it takes less gold or silver now to buy a home than it did, 5 years ago. So we'll see. I just think that the housing market's kind of stuck right now. There's going to be, I think in some point in the next maybe 3 to 5 years, there's going to be a supply glut, and prices across the board are going to have to come down if rates don't come down. So it's one or the other. You can't have both. We're not going to have lower house prices and lower rates. It's going to be one or the other. To me, it's going to be most likely the house prices come down. If we want to activate and galvanize the base to be like first time buyers or refinancing or getting new home buyers, I mean, obviously rates would have to come down. If prices come down, that's fine. But buying a home that's now priced, median home price is $400K, but if your interest is 6% versus 3%, 4%, 5%, it's a big difference to that bottom line. So anyway, we'll find out. Okay, so little checklist for today. Daily profit play, check. Waterfall income, we'll have class at 11:30. Engineered options, check. So I'll do 11:30 a.m. live session. Project options edge, check. So sold a little premium on the Dow, $1.75 to 205. Daily profit play so far looking fine. Engineered options could walk away with a nice little net winner from last week, despite losing trades, but still netting a winner because of defense. That's why we play defense. Engineered options done. Project options done. Waterfall income good. I do have a session to read through. I'll say this on waterfall income. If you are interested in waterfall income, okay, I'm going to introduce the stack strategy today in class, and I'm going to put us out to either the March and April expirations. I might do both. So we had this conversation last week. I sent out a core strategy video update. I think I actually posted it in the masterclass and live training session. It's called Stack Strategy. You can see it as a waterfall income member. So I'm looking at trades out to May, June, July. May, June, July. Sorry. May, June, July. I'm looking at, now that I think the market might be flirting with those lows around 6,800. I may look at a stack out to March or April, like end of this month or into April, and see if we can get some of those lineups to fill. So that way, it's if we're on the cusp of kind of breaking support, I'd like to have some of my stack strategy levels getting filled, and our strikes should be pretty precise because we're not going out super far. We'd be out, maybe 30 to 60 days tops. Ernesto, they are for which ones? Engineered options. I posted at 10:06 in Telegram for engineered options. I have XSP break even, XSP 50%, XSP 100%. That was a 10:06 a.m. post. Oh yeah, and then the new trades monthly. Look at those trades. I have 3 XSPs and I have 2 SPXs in the same post. Yeah, it's the same post right here. New trades monthly, XSP, SPX, all in the same post. And I'm just going to play defense on SPX. I'm not going participation. I'm not going break even. I'm just going to do the defense trades. I'm not doing those. Okay, I said that before. It's like I'm not in those trades. If you want to take weekly trades SPX, then go to your indicator. Yep, go to your indicator. Let me find my chart here. If you want to find XSP for the week, go to your indicator, and you have your levels. So right now, the SPX for the week, this is my break even for the week. This is my 50% ATR defense. This is my 100% ATR defense. So there's SPX break even. This is the 50% defense, and this is the 100% defense. If you like those levels, there they are. Okay, so break even would be around the 6,800. 50% is 67.50, and then 66.75 or 66.70. Picking those strikes around those levels. But I'm sticking with XSP. Okay. Look, to me, there is a time and a place to get way more aggressive on this market, and now is not that time. I'm not that aggressive. There's no way for me to be aggressive. You want to know when it's better to be aggressive? When the market actually comes back to those big support levels. If you want to be aggressive in this year's market, it is waiting for this area here or here. That's when we can get more aggressive. That's when I'm willing to say I'm going to participate now. I'm going to be, way more aggressive on the opening bell candle, or obviously way out here. That's and nobody wants to see the market drop that hard. But if we bounce at 65.50, 6,500, or we bounce at 6,200, 6,150, those are great spots to be more aggressive. Those are likely bounces in the market. So right now it's like I'm choosing to participate despite, despite 14 weeks of indecision and mediocre alignments, I'm choosing to participate and just staying with small trades right now. Okay. Um, yeah. So it's funny you're saying better R to R. It's like 100% return on investment apparently isn't good enough. Because it is good enough, but you're talking about my kind of bonus strategy. I'll do a masterclass on it. Let me see if I can sneak one in this week. So for engineered options, I shared this when we first started the service. I'm like, let's crawl first. Let's crawl, then we walk, then we run. Um, I will get a let me see if I can get a masterclass in this week for engineered options. Okay. No, I know. I mean, look, 1-to-1 is great. Okay. But putting them at key levels and going after almost a 2-to-1, 2.5 to 1, that's not bad either. That's pretty nice actually, right? So we'll try. Yeah. So we'll talk about that this week. And with the masterclass, I'll also throw in those trades. Okay. That's where I'm more likely to put in those trades with the SPX. Okay. So let me see if I can sneak in a class. Looking at the calendar this week, I should have time to do one tomorrow. Tomorrow, who wants to do like a I don't know 1 p.m. engineered options class? Okay, 1 p.m. engineered options Tuesday. Okay, all right, I'll put that on the calendar. So 1 p.m. Okay, and we're gonna do a bonus strategy discussion. Okay, cool. I'll make a post on that later today for the Telegram channel as well. Okay, should have a nice turnout. We got 530 members in the course, so you want to learn how to make 2-to-1, 2.5 to 1, 3-to-1. I would like to learn that. So let's talk about it. Cool. All right. Waterfall income. One thing I want to say on waterfall income, probably it's one of my favorite strategies. Like I'm literally building an ebook on it right now because it's one of my favorite strategies. Number two is this is probably the safest way for us to participate in this current environment, which is just absolute chop right now. I did get filled on one of those trades I talked about from last week. Let me go SPX here. That was one of my stack positions. Actually, let me double check here. Filled. I think I got filled for. I could have swore something got filled here this morning. Yeah, there it is. So that can't be. That's a June 30th. 1, 2, 3, 4. Let me do the math in this trade really quickly. Waterfall strategy 2. And this is today's daily profit play. So we're hanging out daily profit play. Let me find that June 30th expiration here. Okay, so this is 450. Let's do the math here. So I have a 25 wide credit spread. Yep, minus a $20 trap, minus 50 cents. I'm risking 450 to make 50 on that one. So that trade would fill. Let me look at my tracker here. June 30th. $61.50. Okay. So I'm doing another stack trade here. I'm going to put this in trade number 148. So I got a new trade running for waterfall income. 6:30 expiration. 61.50. 30. Okay. So it's in the tracker. We'll talk about it in class in an hour. New trade is in. Okay. Yep, got that, Blake. Perfect. Okay, good. Okay, so what I was going to say on waterfall income, it's number one, like kind of all time. It's one of my favorite ways to introduce and teach options to traders. It's one of my favorite ways to trade the market for pretty passive swing trading in the indexes. I also like the fact that we can give ourselves a nice cushion for error, like margin for error. I can trade anywhere between 5, 10, 15, 20% room for error. They're not foolproof. It's never guaranteed, but we have like my strategy one is winning about 94.5%. My strategy two is winning about 98%. So it's a high probability income strategy. And the trade-off, the way that I structure the trades, the trade-off is like I said, you're getting about $50 income to risk 450. But if you get that fully in profit, 50 out of 450 is about 11% return. Okay. Now nobody gets excited about 11% return on risk. Okay. But if I land one of my strategy two profit traps, this turns into this one in particular would be potentially 2050 over 450 risk. I can make over 400% on risk. All I need is one of these to land, and it washes away, 1, 2, 3 full winners. I'm sorry, 1 or 2, 3 full losses, right? And that's with a 10+% room for error. The trade I just got filled on this morning, 61.50. I mean, the market would have to drop from here. The market would have to drop over 10.15% from here. From recent all-time highs, the market would have to drop, and not only drop, but stay there. It'd have to drop over 12%. So again, high probability profit. I don't think the market's going to go down and stay down. Anything can happen, of course, but I think we're in pretty good shape. Okay, nice, David. Good fill. All right. So that being said, one of my favorite strategies to trade, one of my favorite ways to be cautiously bullish and still generate income week after week. We have a trade set up where if I do win, I have like a 2.5 to 1 or 4 to 1. I expect to win about 11% return every single week. My goal is with a strategy two to make like 11 to 15% a week return on investment, return on risk, and I don't mind stacking these trades up. Okay, so if you'd like to. Last time it happened would have been during one of our. It would have been Liberation Day. We had a profit trap during Liberation Day. Some of those, like there was a profit trap that hit for like an extra $500. You can see in the tracker it would have been one of those, like the P&Ls would have been pretty massive. It would have been. Just looking to see where some of those numbers are pretty large. 102. There's a 1111. Yeah, it would have been like March of last year. So Liberation Day, when the market was down, we had some profit traps. So some of those bonus profits were, worth like $500, $1,000, something like that. Liberation Day is what last year was called during March and April. Like April 2nd was Liberation Day. That was when the market dumped, another like the month was down 15%, but it came rallying back, was down 1% at the end of the month. So here's what it looks like. This is this was the rotation that led to Liberation Day. That was like this. Let me highlight this. This was considered Liberation Day. Just a nasty, nasty move in the market that was government induced. So we announced we're going to, tax the world essentially. Markets didn't love it. And then that reflects a rally that responded afterwards. So we were still participating in trades that allowed us to participate, in these areas. The markets came out of that, and we had a couple of profit traps in here. We did take a couple losses. Like I took 1 or 2 losses at the top, but after that, every single week participating, we had winners, profit traps, and then every single week, pretty much until the end of the year, we never took a single loss. And all the trades we're in right now, same thing. We had trades stacked into January. They're all winners. Trades stacked into February, all winners. Right now, I'm stacking in trades in like the May, June, July area. The market would have to drop over 10%, which obviously it can happen, but it has to drop and stay down, which is where I think the probability again goes to our favor. Okay. All right. So if you like that idea, if it sounds interesting, to have a strategy where you can have the markets be down, 5%, 10%, 15%, 20%, still make money, and get a pretty safe 11% return, or ideally getting even up to 200, 300, 400% return, then I think you'll like the strategy. So I'm going to do a quick read through on waterfall income, and I'm going to have class here. I'm going to kind of hammer through this because I've got class at 11:30 a.m. Okay, and you're all welcome. If you want to jump in as a new member, you can jump in class with me. Okay, so pretty simple stuff. It's one trade, one ticker, once a week. And we're targeting extra income. I post these trades pretty much by noon every single week. Live track record since we've been doing this, 94.1% success. We have 118 winners in the service so far. Live trades, real results. Not too shabby. So developing tools and strategies to the best of our ability. No one can guarantee the future. There's always a high degree of risk when trading, so we know that there's always a risk of loss. Past performance not indicative of future results. We have an 11-year back test here. It's actually a 12-year back test now, 543 trades, 97.1% win rate, 17% average return. That's in winners and losers with an average hold time between 11 to 15 days. Every weekly windfall target's about $1,000 in income based on a 5K risk. We'll talk about that. So just think about it this way. You're going to somewhere between about 15 to 20% return every single week. So if you're willing to risk 5K, make 1,000 every single week. You want to risk more, want to risk less, you can make this scalable, right? From September 2024 to now, 128 live trades. We're still winning 94%, 16% average return on winners and losers with the average hold time of 12 days. We cannot guarantee specific huge results. There's always risk in trading. You know that. Check out our terms, conditions, disclaimers on the Prosperity Pub homepage. All right. In trading, there will be losers. I wish I'd said that this was a 100% win rate. It's not. It's 94%. Still pretty darn good. There's no black box miracle system that prints out winning trades automatically. The whole purpose of research and working with traders like yourselves is to give us an edge in the markets. If you're not comfortable handling a losing trade, if you think just because I'm taking the trade with my own live capital means you should go 10x my leverage, it's managing the trade, managing the emotions that come with real money on the line. Every trade to me is binary. I win or I lose. I expect to win. I wouldn't take the trade with live capital if I didn't want to win and didn't expect to win. So, this is stuff we've got to kind of grow into as traders, is managing our emotions, managing our financial side, which is there's risk. So if you expect to come into any service and any strategy with 100% win rate, I don't think you're ready to be a trader. So just understand that losses will happen. Okay. All right. So you're all here today. Hopefully you know who I am. Trade with me every single day. Nearly 30 years in the market. It's been 26 years now. Stocks, options, futures, forex, cryptos. I could probably bump this up to 20,000 hours spent trading and teaching. I've certainly seen a thing or two. What's been happening the past few months has been truly alarming. In short, governments around the world have become more reckless than ever. We're on the brink of a freaking war, for crying out loud. It's a very noisy geopolitical landscape. We've got China printing yuan. We got The won and the dollar pegged and moving all over the place. There's central bank intervention, there's monetary policy manipulation. You've got the Eurozone for the first time in almost a decade spending money on stuff, mostly on defense, trying to figure out what their energy struggles will be since they rely a lot on Russia. And of course, U.S. government debt is skyrocketing. No signs of slowing down. We're probably going to hit $40 trillion. And our trade deficits continue to widen. Our government spending continues to widen. And all these events leading to this inevitable outcome, which is mostly going to be a reflation trade. Or what we don't want to see would be some type of stickier, persistent, maybe second wave of inflation. Here's what inflation looked like. Since the 70s and 80s, we had that big spike in 2022, got up to nearly 10%. We don't want to see this again. We've had now 5 to 6 years of dealing with experiencing inflation front and center in your face, in your life. Everything around us is more expensive. I think that everyone cares about your family's financial future. I know that you do. I do too. So pay attention. Okay. This new income technique can help you handle the rising cost of living. By the end of today's broadcast, you get a chance to join me for what's going to be my 121st winning trade, live trades. So before we get started, think about this for a moment. If we could target about $1,000 each and every week, it's about a 20% return on our risk every single week by one trade, one ticker at the same time each week. Would you like that? I think a lot of people would. I'm being completely literal when I say this. One trade, one ticker once a week. Happened on March 4th. We post a trade by noon every Monday. Shut down the computer for the rest of the week. When everything works out, there's 1144 in income on that 5K risk. Next Monday, same time like clockwork. A few days go by, automatically closed out for you, 1186 in your broker account on that same 5K risk. Very next week, same time, same place, like clockwork. Post a trade by noon Eastern time on Mondays, rinse and repeat on that 5K starting stake, 1297 in extra income. Okay, final Monday in March, same day, same time, same ticker, 1150 in extra income on that 5K starting stake. Even though the market went down, it didn't matter. We still made money. Altogether, there's 4778 in profit during the month of March. One trade, one ticker, same time each week. So I call these weekly income payouts weekly windfalls, and they've shown the power to pay us even when the market is up, down, or sideways. Another reason it's one of my favorite strategies. Okay, going back 12 years now, we have a 97.1% success rate. That is through 7 corrections, by the way, of 20% or more. And we still had a silky smooth equity curve that goes from bottom left to top right with very little disruption. So what does that look like? Well, just imagine taking 100 trades with me and winning 97 of them. And also that means that the 97 winners add up very nicely for income, and the 3 losses are manageable, defined risk. So this isn't a strategy that sets you back, 20, 30, 40 winners. It's like this strategy sets us back probably 3, 4 trades, right? And with the way that I have them crafted, it's like we actually don't have to set back more than, 1 or 2 trades. So with numbers like that, you can see why this is one of my favorite strategies, and I like to share this with everybody that I can. So I'll reveal why we trade this on every Monday. Why is it on Mondays at 11:59 a.m.? Before we go any further, let me be very clear. There's nothing guaranteed in the markets. There is no instant income magic pill. Please understand this technique is not about gambling on home runs. This is a realistic approach that is designed to help give us an opportunity to target steady income on a weekly basis. It doesn't matter if you have a multi-million-dollar retirement account. It doesn't matter if you're starting out with just a few $100s, a few $1,000s. Anybody can learn this technique. I will teach you. I will train you on how to trade this thing. If you have a standard brokerage account, internet connection or connection to your app, broker app, couple minutes every single Monday, permission to trade options. That's all you need. So I try to make it very easy, but if it's not easy enough, don't worry, because you can join me today, anytime, same Monday, same time, same place. Every Monday at 11:30 a.m., we are live for what's likely going to be our 121st winning trade. So giving everyone a chance to follow along, we can target whatever we're comfortable with, about 15 to 20% return on risk every single week, essentially hands-free. So that perks your ears up, then stick around and welcome to Weekly Windfalls. This is me. I trade with you all every single day. Appreciate you all being here and, joining along, spreading the word, daily profit plan every single day, talking different strategies. We had a busy morning than today. I trade live with you all each and every day. Some of my top followers making a killing. Here's Ken, 16 wins and 1 loss. Here's Kathy making $1,000 a day on average. Kathy's now a full-time trader. Here's Randy, over 200 wins with a 92% win rate. And learning a lot in the process. Here's Lynn, took 4K, turned it into almost 20 grand, all with profits. Today I'm reeling a brand new technique that you've possibly never seen before. I know I've talked about waterfall income at length here for now over 16, 17 months. I still want more people in the service. Why not? We're never going to move the market. This is just one great way to participate in the indexes. So our review